Have you ever wondered what economic indicators successful investors keep an eye on? Sure, we all know about the stock market, but there is more to being a savvy investor than just monitoring the S&P 500. Today we're covering the top 10 most important economic indicators that you need to start monitoring. Before we get started, be sure to hit that subscribe button and ring that bell to be notified when we post more amazing videos like this in the future. And here we go. Number 10. Consumer Confidence Index, CCI. The Consumer Confidence Index, CCI, measures consumers' confidence levels regarding their current financial situation and their outlook regarding their financial situation going forward. This index provides valuable insights into consumer sentiment, which could have implications for investment returns depending on what direction. Number 9. Consumer Price Index, CPI. The Consumer Price Index, CPI, measures the average price level of a basket of goods and services purchased by consumers in a given period of time, typically 1 month or 1 year. This index is used to measure inflation, which can have a significant impact on investment returns. Investors should monitor the CPI closely as it can provide valuable insight into how an economy is performing and whether it is likely to experience inflationary pressures in the future. Number 8. Employment data. Employment data provides investors with an indication of how well an economy is doing in terms of job creation and wage growth. This data includes information such as unemployment rate, labor force participation rate, average hourly earnings, and non-farm payrolls. By monitoring this data, investors can gain insight into job creation and economic health. Positive trends may indicate business success and increased consumer spending. Number 7. Interest rates. Interest rates are another important economic indicator for investors to monitor as they can have a significant impact on investment returns. When interest rates increase, bond prices typically fall as they become less attractive investments compared to other assets such as stocks or commodities. When interest rates decrease, bond prices usually rise as they become more appealing investments compared to stocks or commodities. Number 6. Housing market data. Housing market data provides investors with information about the health of the housing market in a given area or country. This data includes information such as home sales volume, median home prices, inventory levels, and mortgage delinquency rates, which can give investors insight into whether the housing market is strong or weak in any given area or country. Number 5. Stock market performance. Stock market performance is another important economic indicator for investors to monitor as it provides them with an indication of how well businesses are doing in general and how confident consumers are feeling about their financial prospects going forward. By monitoring stock market performance, investors gain insight into investment opportunities and risks associated with specific companies or industries within a stock market index over time. Number 4. Money supply. The money supply measures how much money is available for people to spend within an economy at any given time and is often used by central banks to control inflation levels within an economy by increasing or decreasing the money supply accordingly through various monetary policies such as quantitative easing, QE. Number 3. Trade balance. The trade balance measures how much exports exceed imports within a specific period, offering insights into a country's competitiveness on global markets over time. If exports consistently surpass imports, it indicates successful global market competition, which bodes well for domestic businesses. Number 2. Industrial Production Index, IPI. The Industrial Production Index, IPI, measures changes in industrial production from 1 month to another across all major sectors within a given economy, such as manufacturing, mining, utilities, construction, and more. This index offers valuable insights into changes in industrial activity across major sectors within an economy. These changes could impact investment returns depending on their direction over time. Number 1. Gross Domestic Product, GDP. The Gross Domestic Product, GDP, is the most important economic indicator for investors to monitor. It measures the total value of goods and services produced in a country during a given period of time, typically 1 quarter or 1 year. The GDP can be used to measure the overall health of an economy and can provide investors with valuable insight into how well an economy is performing. And that's all we have for today. We hope you enjoyed this video. If so, be sure to hit that like button, subscribe, and drop us a comment down below. Thanks for watching, and we'll see you next time.